Wait, let's just stop there. Spending
Absolutely.
too much on the continued build out for AI.
Yes.
And that number, well, it's around 75 billion for 25, but I guess it's the words in the call where they said CapEx growth will be notably larger. CapEx dollar growth will be notably larger in 26. What do we take that to mean?
Okay, well, there's two ways to look at it. One is that at this point, he just says, I'm going to win no matter what, and I'm going to spend, this is the opposite of the year of efficiency. I'm just going to spend, which some people immediately said, spend recklessly. I don't agree with that. I think the crucial moment on the conference call, which is completely being overlooked, is page 14, which is that he's got to go for very high quality, good video, which is going to be fantastic for advertisers. But you have to have the highest end NVIDIA to do that. Now, let's remember, before we just castigate this guy too much, Hock Tan's on his board, the CEO of Broadcom. You think he's just, he's got maybe, I think, the smartest, toughest investor in this particular element. And then he has himself, obviously, he's proven. But there's downgrades, there's price targets. It's almost as if people just said, we've been waiting for this guy to trip up and we're going after him. And then, of course, he has this charge, which was actually from the great, big, beautiful, whatever bill. David, I want to take the other side. And I'll tell you why I want to take the other side. I've not made a lot of money betting against this man when he does these kinds of things. And if we listen to Jensen Huang, Jensen's always saying, the CEO of NVIDIA, that if you buy ours, this is something core we would verify, if you buy ours, they don't expire. They continue to be valuable. Also, I think that I would say Zuckerberg has created the cheapest power, and some of that's energy. They said, Jim, don't focus too much on energy. Our power grid is better than everybody else's. But they're saying, look, we will be able to use this power. You may not think that we need all this accelerated compute, which Jensen says is just as good as AI. We're going to do it. And he's not getting any latitude. So, David, let me ask you, is this the end of spend and get rewarded? Or do we just say you have to justify it much better, which is what Alphabet did?
Well, Meta is different than Alphabet or Microsoft in terms of its CapEx spend because it doesn't have a cloud offering. At the very least, when you see those enormous numbers from Microsoft or from Azure or from Google Cloud, CapEx overall for the companies, but you know that a lot of it's going in there, and there is a return already.
Yes, and Thomas Kurian, he doesn't get credit in the call, but he did Google Cloud. And Google Cloud is a monster. People are going to be talking about Google Cloud tonight compared to Amazon. Now, the shoes for Amazon are now big. I don't know. I mean, as much as the long knives are out for Mark, they may be out for Jassy, too. These people have all taken the kind of a share approach. It's Andy versus Mark. I mean, I don't know how that happened.
Trump also saying he and she did not discuss NVIDIA's Blackwell chip. Take a listen to the exchange between the president and a reporter. This took place on Air Force One.
We did discuss chips, and they're going to be talking to NVIDIA and others about taking chips. Look, we make great chips. NVIDIA is the leader. And I'll be speaking to Jensen from NVIDIA, but they're going to be discussing that with NVIDIA to see whether or not they can do. I said that's really between you and NVIDIA, but we're sort of the arbitrator or the referee.
And just to clarify, sir, that is the downgraded Blackwell chips. You would authorize those to be exported?
No, not the Blackwell. We're not talking about the Blackwell. That just came out yesterday. But a lot of chips, a lot of the chips, and that's good for us.
Under turbulence.
Yeah. A ton of that.
What do you make of it? NVIDIA obviously is now a $5+ trillion market value. Again, important. And it seems that there is agreement. The Chinese have affirmed what the U.S. has said as well, which is important. Right. But nothing about chips, other than those comments you just heard.
Exactly, and there is a real tug of war in Washington about what happens if we give them our best, which is Blackwell. There is a lower-end Blackwell that they could sell. Now, David, I think we've got to accept the fact that last night was the night where if you spend too much with Jensen, your stock goes down, all right? So that's a negative for NVIDIA. You did not hear what you wanted to hear, which is that they are going full bore to give the PRC, NVIDIA, Blackwell. So it's going to be a day where it's going to fall back under $5 trillion. I urge people to not take a minute to minute. But there are people in Washington, David, who feel like this could be used militarily. Jensen has said over and over again to me, look, how are they not going to use it militarily? They've committed.
Well, just to come back to the huge earnings this morning, Microsoft CapEx $34.9 billion for the quarter.
They're constrained.
So they're running at $140 billion. Half, let me just finish. Half was spent on GPUs and CPUs. So half of that 34.9, almost, I mean, most of it went to half of the half went to NVIDIA.
Broadcom is accepting a key board member at Meta that they have to spend. He would be the guy who would cut it back tonight, David. Tonight, what is Amazon going to do? They're not spending enough on NVIDIA. They're not. They're using their own. Let's see what happens.
Speaking of chips, Jeff, are you surprised that it didn't really come up? The president did talk about it on the trip home on Air Force One, but it didn't appear to be a key part at all of the conversation that took place.
I think it definitely came up. The two main issues for discussion at this meeting were chips and rare earths. That's where rare earths really started becoming prominent when we were talking about chip technology. I'm sure it did. I just don't think we're hearing much about it. Trump is alluding to it, saying that he needs to talk to Jensen Huang, and then Jensen needs to talk to the Chinese. There's a lot of back and forth there that I would like to get more details about.
Right. Okay. So we don't have the details. They did discuss, but we don't really know much. Do you have any expectations there in terms of where that may end up? In terms of both the Chinese usage of those chips and obviously what it will mean for the U.S. providers of some, including certainly NVIDIA?
Well, the Chinese are clearly pressing for as much technology as they can get. They've been pressing for more chips, and they will continue to. And when they get chip technology, they will press for something else, as I was sort of suggesting later. The choice here is between Jensen Huang's assertion that in the short term, we need for the Chinese to buy our chips and become reliant on our technology, and the long-term certainty that the Chinese aim is to become completely independent. So they will buy those chips for the sole purpose of developing their own independent technologies and then no longer having a dependence on the United States. That's what we're looking at here. And so I'm more in favor of being more restrictive than giving them Blackwell or other premier technologies.
Rather than continuing to be constrained on CapEx and feeling in the core business like we have significant investments that we could make that we're not able to make, that would be profitable, that the right thing to do is to try to accelerate this to make sure that we have the compute that we need, both for the AI research and new things that we're doing, and to try to get to a different state on our compute stance on the core business.
Meta is saying that its spending will go towards building its own data center infrastructure, as well as more deals with cloud providers. Now, this comes on the heels of recent deals with Google, CoreWeave, and Oracle, all of those multi-billion-dollar deals since August.
All right, and NVIDIA. Jensen had this amazing piece earlier, the new industrial revolution. And it feels like when he gives applications, models, infrastructure, GPUs, energy, it feels like, is this the blueprint for how your portfolio should look?
Well, absolutely. And I think right now you really want to be overweight on these three. So the infrastructure, GPU, energy. And then as we get further 5+ years into the cycle, you're going to see this application start paying off. So really, this is why we're focused on the hardware side, whether it's on the GPUs, the networking side, energy generation names. I think that's really going to be where you see the near term, like 26 upside.
Cloud revenue growth was up 20%. That was well above expectations and higher than last quarter's growth. Let's bring in CNBC's Mackenzie Sagalas for the details. Mac.
So, Mel, Amazon stock trades on cloud, and that business is finally back in acceleration mode, rising at its fastest pace since 2022 and beating Wall Street's expectations with $33 billion in revenue. Now, that's helping ease fears about Amazon losing big-ticket AI deals to Google and Microsoft. CEO Andy Jassy saying in the shareholder letter that AWS is seeing strong demand in both AI and core infrastructure, noting that the company has been focused on expanding compute capacity to meet that surge. The report helps offset softer retail growth, with online store revenue slowing down. And ad service revenue, Amazon's high margin, fast-growing business came in flat. But AWS, it's setting up Amazon for its first ever $200 billion quarter, with the company expecting nearly $210 billion in revenue in Q4. That's what they're projecting. And that call, which is underway now, they say backlog has grown to $200 billion by the end of Q3. And that doesn't include several unannounced new deals in October, which together is more than their total deal volume for all of the third quarter. That's probably why you're seeing those shares up around 13% right now, Mel.
All right, Mac, thank you. Keep us posted on the call. Mackenzie Sagalos. Guy, finally, it beat expectations on AWS.
And good for them. And I'm looking at this. Remember, there were days when we used to do the show where operating margins for Amazon were 3-4%. 12% operating margin. So they're obviously doing things the right way. And it's deserved of even this valuation, which is not ridiculous. So this move to me makes sense. I don't know how Carter feels technically, but you're through those prior highs. I think the stock can continue to go higher in the back of this quarter.
I think the piece that really is surprising people is that they're talking about this backlog. The CapEx side, just to kind of put it, I think it's important because that's an A topic. But the CapEx piece, they did mention the numbers, to put it in perspective, is about 6% higher than what the street had been thinking before. So that was the guide up in CapEx. But as far as kind of that move, it's in part because of that backlog comment, that their backlog is bigger for the December quarter than the revenue was in the September quarter. Of course, December is their big quarter, so that kind of makes sense. But that is really a bullish sign. I think the street's probably going to shake out to something in the order of 20-21% AWS growth for the December quarter, and I think that that's what's driving it. The simple takeaway is that I think Amazon has not performed that well. We're seeing a little bit of a recovery here. The results were solid. The outlook is solid, but I think that in its totality, there's better companies. I think Apple's going to significantly outperform Amazon from tomorrow morning, wherever they open, to the end of the year.
Wow, I like that.
What, the call?
Yeah.
It's a bold call.
Gene's the man.
Yeah.
All right, Gene, really quickly. So Amazon right now, if it opens here, it's going to gain, what, $200 billion in market cap. And, you know, you talk about this Anthropic relationship all the time. A guy that I know is a brilliant tech investor, Josh Wolf at Lux. I think the other day he said, if I was a betting man, I'd bet that Amazon eventually owns Anthropic. Are we going to see M&A 200 billion plus? Okay, we just heard OpenAI or some reporting that they are targeting $1 trillion IPO at some point in the future. The numbers are getting kind of staggering. Do you think we will see any of these big incumbents make acquisitions like that in the private markets?
I think if I was going to say on a scale 1 to 10, the desire for Amazon to pay $200 billion for something like Anthropic is high. It's a 10 out of 10. I think they have to do that. They've got to add some substance to what they're building around AS and create some unique products that even pull in more AWS revenue. Google, Gemini, and Azure's been successful at that. The one piece, of course, is will the regulatory environment allow that big of a deal? I don't know the answer to that, but I do know that if you look around the table, there's not that many seats that have these large language models. You have Anthropic, you have Grok, you have GPT with OpenAI. So they're going to be highly sought after assets, and my sense is we're going to see some pretty profound M&A over the next couple of years.
But much more important, this Amazon Web Services, AWS, regarded currently as its most important division and also its Achilles heel, saw its revenue growth accelerate from 17.5% to 20.2%, with higher than expected margins, too. Remember, coming to the quarter, I told you that Wall Street was focused like a laser on the growth rate for web services. I think that's a little myopic, if not downright stupid, but it's what the shareholder base care about. And Amazon, well, it blew away all expectations. As CEO Andy Jassy put it, quote, AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20.2%. Yeah. We continue to see strong demand in AI and core infrastructure, and we've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months, end quote. So far, so good. On top of that, management gave strong guidance for the current quarter. Hey, maybe Meta's spending like a drunken sailor, but Amazon's doing just fine and efficiently putting up great numbers in the process. It's great to be prudent sometimes. This was some darn quarter. And look, am I doing cartwheels about it? Yeah, kind of.
All right, I hope you're all doing well today and staying calm in this market. So yesterday, the president said aboard Air Force One that he would speak with President Xi of China about NVIDIA's Blackwell, leading to NVIDIA stock trading notably higher. And then after the meeting between the two leaders, the president said that he was not talking about allowing a Blackwell chip into China. He said China will have to talk with NVIDIA and that he would speak with Jensen. So apparently a Blackwell chip for China is off the table, at least for the moment, according to the president. That's the main reason why NVIDIA traded lower today. Also today, Amazon reported strong earnings after market close, with CEO Andy Jassy saying, quote, AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20.2% year over year. Heading into this earnings report, market participants were looking for a re-acceleration of AWS growth, as many market participants were of the view last quarter that Amazon was not spending enough on NVIDIA hardware, and therefore AWS was not growing as fast as it otherwise would. Now with this earnings report, we have confirmation that AWS growth is re-accelerating, and they're focused on accelerating AI capacity. AWS backlog grew to $200 billion, and that does not include several unannounced new deals. CapEx in Q3 was $34.2 billion, and Amazon raised their 2025 CapEx guidance to $125 billion. That is higher than the previously announced guide of $118.5 billion. Amazon's own Trainium chips grew by 150% quarter over quarter, but Jassy said that Amazon will continue to buy more NVIDIA next year and into the future. Jassy also said that Amazon is going to be very aggressive in investing in capacity because, quote, we see the demand as fast as we're adding capacity. Right now, we're monetizing it. And so as soon as new capacity comes online, it gets consumed. That is very good news for NVIDIA. Really quick, I want to briefly go over Alphabet, Meta, and Microsoft's CapEx guidance in case you missed yesterday's second video. Alphabet raised their 2025 CapEx guidance up to the range of $91 to $93 billion. That is up from their previously announced guide of $85 billion. Meta raised the lower end of their 2025 CapEx guidance range. They guided 2025 CapEx in the range of $70 to $72 billion, up from the previous range of $66 to $72 billion. And when speaking about 2026 CapEx, Meta said, quote, our current expectation is that capital expenditures dollar growth will be notably larger in 2026 than 2025. That is very good news for NVIDIA. And now let's talk about Microsoft. Microsoft did not give us a specific number when it comes to CapEx guidance, but they did share some important news with us. They told us they're increasing their spending on CPUs and GPUs, and that the growth rate of CapEx in fiscal 2026 will be greater than that of fiscal 2025. This is big news, and I don't think the market has fully realized the implications of this yet. Microsoft previously told us CapEx growth in fiscal 2026 would be lesser than that of fiscal 2025. But now they're telling us that the growth rate of CapEx in fiscal 26 will be greater than that of fiscal 25. So not only are they telling us that CapEx is going to increase, they're also telling us that the rate at which CapEx will increase is accelerating. That is important news that I don't think the market has fully realized yet. And it's very positive for NVIDIA. Microsoft CFO told us that demand is increasing and usage is increasing very quickly. And here's another big piece of news from the Microsoft earnings call. Microsoft expects to be capacity constrained at least through the end of fiscal 2026. Demand is extremely strong, and Microsoft has $400 billion worth of backlog that they have to deliver to their paying customers. Also, the fact that Microsoft expects to continue to be capacity constrained through the end of fiscal 2026 bodes very well for companies like CoreWeave, Nebius, and Iron. We have once again gotten through another earnings season wherein each of the hyperscalers increased their CapEx guidance. I want you to notice two very important points. First, the world continues to be severely compute constrained in the face of extremely strong AI demand. And second, this is completely different from the dot-com bubble. In the early days of the internet, infrastructure was being built before there was known demand. But this time, the demand is already there, and the demand is so strong that the hyperscalers have hundreds of billions of dollars worth of backlog that they have to deliver to their paying customers. That is business on the books from paying customers. And so, again, the demand is already there before the infrastructure comes online, and that is a fundamental difference between this AI revolution and the dot-com era. As I've mentioned in previous videos, new use case development and mass adoption of the technology is going to happen much faster than it did during the early days of the internet, because the internet is already here, making new use case development and mass adoption of the technology immediately possible. This drastically reduces the risks of long digestion periods and overbuilds of capacity like what we saw in the early days of the internet. Keep that in mind the next time you hear someone questioning whether we are in an AI bubble. While there are similarities between now and the dot-com era, there are also major fundamental differences. I don't want to sound like a broken record, but I seriously think that most analysts continue to underestimate NVIDIA's long-term growth. I'm not viewing this as a short-term trade. I'm viewing this as is a multi-year investment. The world is severely compute constrained in the face of extremely strong AI demand, and that will likely continue for at least the next few years. At this very moment, we are on the cusp of agentic AI being introduced to the masses, and I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. I've been saying this for months, and then today on Amazon's earnings call, CEO Andy Jassy spoke at length about his optimism around AI agents and agentic e-commerce. Agentic AI is going to fundamentally change society, and we're just in the early stages of agentic AI being introduced to the public. And then after agentic AI, we have physical AI. Now we're talking about physical AI agents completing physical tasks in the real world. There's a reason I keep mentioning physical AI in these videos. I seriously think that NVIDIA's physical AI business may eventually be larger than their current data center business. And I do not think that analysts are adequately factoring NVIDIA's physical AI business into their long-term estimates. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're establishing themselves as the underlying foundation supporting all of it. This is not getting enough attention. In addition to physical AI, we also have quantum GPU supercomputing, which represents another long-term growth opportunity for NVIDIA. Plus, we have other large long-term opportunities, such as sovereign AI, enterprise AI, and many AI native startups. All of these opportunities and customer segments will drive even more demand for compute from NVIDIA. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble-bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.